Shares in Aritzia hitting a record high today. Yet again, the company beat expectations. We are joined by Martin Landry, Managing Director, Equity Research in Consumer Products and Merchandising at Stifel. Martin, great to see you. Thank you very much indeed. So you note that this is the 10th consecutive earnings beat by Aritzia. Is there anything not to like here?
Indeed, Aritzia is hitting it on all cylinders. Look, the company is having a lot of success right now. Its products are getting a ton of traction. The results were very impressive. I mean, the same store sales were up 34% year over year. That's one of the highest figure I've ever seen in my career. EPS came in at $1.10, up 54% year over year. So meaningfully ahead of consensus at 89 cents. So no wonder why the shares are reacting well today to these exceptional results.
We're looking at a market cap north of $14 billion right now. I mean, presumably the law of large numbers will catch up on them. They can't maintain this kind of growth forever.
That's sure. I mean, I'm not going to be sitting here saying that this is going to last forever. But one thing that propelled their sales this quarter was the launch of their mobile app.
Right.
Believe it or not, it's the first time that the company has launched a mobile app, and it was a very successful launch. They had 1.4 million downloads in the last 2 months. The app was launched in late October, and this allows them to boost their e-commerce sales. Their e-commerce sales were up really strong, and it allows them to cater also the offering on the phone to the person that's shopping and provide a better experience and probably provide a more customization of the offering.
It's interesting. So they had an e-commerce presence before, but just the fact that people can order clothes over their phones or at least look at products made that much of a difference?
Well, Andrew, I don't have to tell you that everybody is on their phone, and apps are very popular these days, right?
Yeah.
So you would have thought that Aritzia would have had an app a long time ago, like most retailers. But look, we saw this as upside, and we're seeing it in the numbers today. I mean, even look at their Canadian sales. Their Canadian sales were up 29% year over year, and Canada is a mature market for Aritzia. The number of stores were the same on a year-over-year basis, maybe a couple of expansions, but to have sales up 29% in Canada, it's pretty impressive, and it shows that the company is gaining significant share. And
you say they have fewer than 80 stores so far in the U.S., and you reckon there's plenty of room to grow? Yeah, well, we see Aritzia as one of the best long-term compounder in our coverage universe because they have a ton of reinvestment opportunities, like you mentioned. In the U.S., 72 stores. The company is talking about the potential to triple that number to 200. So tons of reinvestment opportunities, and with our return on invested capital north of 20%. Cash is going to compound really rapidly, and that's what we like to see, and that's what creates shareholder value. And you say they're doing online sales abroad, but they haven't outside the U.S. and Canada. They haven't opened any brick and mortar yet. Yeah, and that's another upside, another long-term potential that we see. The company alluded to it a little bit in the earnings call yesterday that, they have an international website, but no stores. And they're talking about countries like the UK, like Australia, Germany, Switzerland, and Asia, and China in particular. So you got to think that in the next 5 years, we're going to see Aritzia with an international presence and boots on the ground internationally. And just remind us, what is their target market? Is it from young to older women? Well, that's when you step back and you're like, why is Aritzia having so much success? There's a couple of things that we can point to. First, the quality of their products, right? They're known for high quality, luxurious fabric. Their shopping experience, their stores are beautiful. They have cafes in some of their stores. And then the quality, when shoppers buy an Aritzia product, they know it's going to last. So they found a niche in the everyday luxury where customers are splurging a little bit because they're not cheap,
those products, but they feel that, this thing's going to last for a couple of years. It's classic. It's, for your work day, for your outings with your friends on weekends, and for lounging at home. And it's from, 17 years old to 47 years old. So it's a broad market and a broad occasions for that. And that's what created their success.
They just, they're late last year, they opened in Manhattan's Flatiron district. It sounds pretty fancy, a 25,000 square foot flagship and soaring scallop ceilings. I guess you do want to have fancy stores in New York. That's a prestige thing.
Yes, it's a marketing tool, I would agree. And they've said that, their stores, their flagship stores, they've got 4 flagship stores, are like a really good marketing tool for them. It's also a great way to acquire new customers. So, these openings have been very successful for Aritzia. And last year they had a couple of them. So we're lapping these openings last year and seeing some really strong sales.
I guess we have to remember Lululemon, though. You remember, a few years ago, Lulu was posting sales growth like this. Rivals emerged. That stock has suffered lately.
Yeah, look, I don't cover Lulu, so it's a little harder for me to comment on Lulu, but I would agree that the fashion comes in cycle, and investors need to keep that in mind. But what we like about Aritzia is that it's classic offering, right? Very classical styles. And when you look at the company's balance sheet now, their cash balance has gone up to $650 million. It's, they have a lot of flexibility. They have a lot of room to redeploy capital and to give capital back to shareholders. So they're in a really, really good spot now. How long it lasts, we'll see. But like we said, we see it as a great long-term compounder in Canada.
Martin, thank you very much indeed. Really appreciate it. Martin Landry, a Managing Director in Equity Research, Consumer Products and Merchandising at Stifel.